Hey, future CPAs. If you're an accounting student staring down the barrel of the Philippine CPA licensure exam, you are in the exact right place. Look, today's explainer isn't just another boring review. We are doing a high-energy, brain-hacking session designed specifically to help you completely crush the LEPA. We're going to take the totally complex world of Philippine income taxation and basically wire it directly into your long-term memory. We want these concepts locked in tight, not just for that quiz tomorrow, but for the next 2 or 3 years right into the board exam room. So let's get into it. Okay, let's map out the filing system in your mind right now so your brain knows exactly where to put this stuff. We're covering the purpose and tax systems, Philippine tax principles, classifications and rules, Situs of income rules, taxability by Situs, and then we'll wrap up by locking it all in with a rapid-fire LCPA bullet review. Section 1, Purpose and Tax Systems. We're starting with the why. Before you can memorize how the rules work, your brain really needs to know why they even exist in the first place. When you have an anchor, you hold on to the information way longer. So, why do we tax income? Well, it boils down to 2 big things. Number 1, to raise revenue to defray government expenses. Literally, this is just how the country keeps the lights on, right? Number 2, to mitigate wealth inequality through a progressive scheme. It's the great equalizer. It places the heaviest burden on the people who are actually best able to pay it. Keep that progressive concept in the back of your mind, because it's basically the heartbeat of individual taxation.
All right, here is our first major study hack. We're going to use contrast to build memory. Let's look at the 2 grand systems of taxation. On one side, we've got the global system. Imagine a giant mixing bowl where literally all your active income gets dumped in together, deductions are taken out, and whatever is left over, the net amount, gets hit with a single progressive tax rate. It just lumps everything together. On the flip side is the scheduler system. This system boxes things out. It takes specific types of income, stuff like passive income or capital gains, puts them into their own separate little categories, and slaps a very specific, usually final, gross tax rate on them. So remember, global lumps, scheduler categorizes.
Moving to Section 2, Philippine tax principles, the hybrid approach. Okay, so now that we know the 2 extremes, how exactly does the Philippines do it? Well, we use a semi-global, semi-scheduler system. It's a total hybrid. And honestly, this brilliantly illustrates exactly why you are going to have to memorize both those graduated tax tables for regular income and those specific final tax percentages for things like interests and dividends later on. Our system casts a really wide net by adopting the citizenship, residence, and source principles. It completely blends that global mixing bowl with the scheduler boxes. Section 3, Classifications and Threshold Rules, also known as the ultimate board exam trap. You gotta lean in and listen closely here because examiners absolutely love setting traps on these boundaries. Seriously, if you categorize a taxpayer wrong at step 1, every single computation that follows is gonna be totally wrong. Let's familiarize your brain with these 5 acronyms. We have the resident citizen, or RC, the non-resident citizen, NRC, the resident alien, RA, and then aliens who don't reside here get split into 2 buckets: non-resident alien engaged in trade or business, the NRAETB, and not engaged in trade or business, the NRANETB. Take a mental snapshot of this list right now. Now pay really close attention to the exact phrasing used in the law. This is an absolutely crucial study hack for memorizing these thresholds. The modifiers matter. To classify an alien as engaged in trade or business based purely on how long they stay, they've got to be in the Philippines for more than 180 days. But for a citizen to be classified as a non-resident citizen based on working abroad, their employment must require them to be physically present abroad for at least 183 days. Did you catch that? More than for aliens, at least for citizens. In the LECPA, precise wording is quite literally everything. 183. I want you to burn this number into your mind right now. 183 days. That is exactly half a year plus half a day. If a Filipino citizen goes to work abroad and is physically present there most of the time, which legally means 183 days or more during the taxable year, they unlock that non-resident citizen status. That number is the magic key. Section 4, Situs of income rules, figuring out the place of taxation. Let's tap into your spatial memory for a second. Situs is just a fancy, slightly intimidating legal word that means the place of taxation. It's just asking, where did this income actually come from? The whole trick here is mapping the specific activity to its geographical location. Try to picture a matrix in your head during the exam. If the income is interest, the situs is the residence of the debtor. Services, that's the place of performance. Rents, the location of the property. And for royalties, it's the place of use. You just have to link the action directly to the place. Okay, heads up, because here comes a massive LECPA curveball regarding Situs, and it's all about dividends. If you get a dividend from a domestic corporation, it is always sourced within the Philippines. Pure and simple, no questions asked. But if it comes from a foreign corporation, the general rule is it's sourced without. However, and this is a big however, watch out for the predominance test. If 50% or more of that foreign corporation's gross income for the past 3 years actually came from the Philippines, then a proportionate chunk of that dividend is suddenly considered income within the Philippines. You gotta always check for that 50% threshold in word problems. Section 5, taxability based on Situs, bringing it to the master rule. So we've got our taxpayer classifications and we've got our source rules. Now let's smash them all together into the absolute, golden, undisputed master rule of Philippine individual taxation. First, think about the resident citizen category. Only the resident citizen is taxed globally on income derived from sources both within and without the Philippines. Now think about literally everyone else, the non-resident citizen, the resident alien, and both types of non-resident aliens. They are all taxable only on income derived from sources within the Philippines. It's that simple. Resident citizens are global, everyone else is local. Section 6, LECPA Bullet Review. Time to lock it all in. You've absorbed the framework. Awesome. Now we're going to trigger the first cycle of spaced repetition to lock this deep into your long-term memory. Rapid fire review. Go through these in your head with me. Rule 1. Only resident citizens are taxed globally. Rule 2. Aliens shift to engaged in trade or business when they stay more than 180 days. Rule 3. Citizens shift to non-resident status when they are physically present abroad for at least 183 days. Rule 4. The situs for services is always exactly where the service is actually performed. Boom. You are equipped. You've got the framework down. I'm going to leave you with one final provocative thought to test how well we just hacked your brain. Imagine this. A non-resident alien stays in the Philippines for exactly 180 days. Is he engaged in trade or business? Think back to the exact wording we talked about earlier. The threshold to become engaged in trade or business based on your stay is more than 180 days. Therefore, at exactly 180 days, he doesn't cross the line. He remains a non-resident alien not engaged in trade or business. That right there, that is the exact kind of analytical precision that passes the board exam. Keep reviewing, keep hacking those study habits, and best of luck to you on your CPA journey.